Welcome to Finance First. My name is Bill Wreaks. I am the Chief Analyst at the Gramercy Institute. We're a think tank for senior marketers at major financial firms. We are hosting this video series in partnership with Google. And speaking of Google, it is my pleasure to introduce you to our first guest, who is Mike Henry. He's the Managing Director of Financial Services at Google. And Mike, would you please introduce yourself and tell us a little bit more about what you do at Google?
Sure, Bill. Well, first of all, thank you for having me. I am honored to be the first, and I just want to say we really value being part of the Gramercy community, and I'm excited to connect today. So, in terms of what I do at Google, along with my partner Steve Arthur, we oversee a number of Google teams that work with the largest financial services brands across the U.S. So that's banking, brokerage, insurance, tax, and increasingly remittance. And what we try to do with these customers is to help them drive digital maturity by using data and tech in combination to deliver the right message, the right offer to the right consumer at the right moment for a price that is commensurate with that consumer's likely value to the financial institution.
Mike, thank you very much for that. It is really our pleasure to have you here with us. Tell me what we're going to learn today.
Yeah, so we're going to talk about this concept of consumer trust in the financial services space, and particularly how consumer trust is evolving. Which financial institutions today's consumers are willing to trust, but more importantly, why they trust them.
Great. Tell me a little bit more, if you would.
Sure. So setting a little context, right? No doubt we observed and absorbed tremendous change in 2020. Particularly in terms of consumer behaviors and needs. And the cool thing is that we can see those changes revealed on Google in the ways that consumers are searching and what they're searching for. So let me give you a couple stats. Last March, we saw a 3x increase in Google searches for the phrase financial help as the realities and the anxieties of COVID set in for Americans. Around the same time, we saw a 2x increase in searches for phrases like mobile banking app, as Americans realized that storefronts were going to be closed and they were going to be sheltered in place for some time to come. But what I want to underscore is this idea that the trend toward digital first experiences across industries, including in financial services, was well underway before 2020. And we could see that in the growth of disruptors like Chime and Varo and SoFi and Lemonade and so many others. And to the amazement of many, including myself, consumers were trusting these disruptors, these startups with their assets.
Yeah. It really is amazing that these disruptor brands have been able to take hold of trust in financial services so quickly and so effectively. I mean, there was a time when the tallest building or the most assets or the most famous CEO equated to trust in financial services. And apparently things are changing.
Right. Yeah, I think things are changing, and our hypothesis at Google, which our research is corroborating, is that today trust is earned in new ways as digital continues to transform our world.
Yeah. Can you be more specific, please?
Yeah. Well, here's the hypothesis: is that we think that financial institutions today earn consumer trust by delivering fast, frictionless, personalized, digital first experiences, particularly on mobile devices, that are helpful. And this is something that we think a lot about as we build our own Google products and features, is what's really going to be helpful for the end users. And that's exactly the mindset that I think the disruptors have been working from for quite some time, long before the pandemic. And consumers have seen it and appreciated it. So a couple stats from the research that we're doing at Google. The first is that our research shows that 77% of US financial consumers believe that disruptors are delivering the most innovative products and features. And 80% of what we're calling early adopters, and Bill, we'll come back to this concept of early adopters in a second, because it's important that we understand this is not a niche group, but 80% of early adopters believe that disruptors care about making their financial lives easier.
Yeah, Mike, thank you very much. Now, you mentioned these early adopters. Who are they? Who are we talking about?
Yeah, it's a great question, because often when we talk about consumers who are early adopters, we're talking about sort of that cutting edge of the 5% that are willing to adopt technology first and others come along later or much later. In this case, in this research, the term early adopters is really a misnomer. So what we're finding in our research is that early adopters represent 37% of all financial decision makers in the US aged 18 to 74. 37% of 18 to 74-year-old decision makers in the US are considered early adopters. It's a huge, broad demographic group. And that's what we found, is that this idea of being an early adopter, it doesn't align to any particular demographic. Rather, early adopters share a set of psychographic characteristics. So they're open to trying new things. They're proactive in seeking out better financial opportunities, right? So they will move their money around from one bank to another to get a better rate, and they'll shop around for a better insurance policy. And these early adopters are also very much inclined to be a source of financial recommendations for friends and family. So they are likely to evangelize brands that they really love. And this is happening on a broad scale, and so it shouldn't surprise us that a bank like Chime has grown its customer base from something like 8 million customers only a year ago to 12 million at last report just a few weeks ago. What boggles my mind about Chime's growth in particular is that 8 million of Chime's customers consider Chime to be their primary bank. That puts Chime at parity with Citibank, right? Talk about skyscrapers, right? And it puts Chime ahead of US Bank, Ally, PNC, and so many others that have been household names for decades and even longer.
Mike, that is astounding. And really, thank you for sharing that with us. Now, listen, we only have a little bit of time left. Tell me, in your advice, what should marketers at financial services firms be doing right now?
Yeah. So here's what I would say. Whether your brand is 150 years old or 5 years old or somewhere in between, get out your phone, take out your mobile device, and take a few minutes to experience your brand as a consumer would. Try opening a checking account, try getting an insurance quote, try to pay a bill. And if you find that the UX is slow or confusing or clunky, invest the resources to get it fixed. And if the UX is great, make it even better, because we have to remember that these days, consumers expect every brand experience to be as fast, frictionless, personalized, and helpful as the best brand experience they've ever had. And that bar is high, and it continues to get higher.
Mike, I can't thank you enough. Thank you for sharing with us the insights, the information, the intelligence that you have. This has been a marvelous discussion. I know that our audience has enjoyed it. I know that I have as well. Mike Henry, Managing Director, Financial Services at Google. Thank you very much. I am Bill Wreaks, Chief Analyst of the Gramercy Institute. I thank you, Mike. I thank our audience for joining us, and we will see you next time for our next episode of Finance First.